All right, Paul, I'm recording this on OBS, so we'll see if it works or not.
All right, well, we'll see what happens.
Oh, it looks like it's picking up your voice. I think it should be fine.
All right, well, that's better than the alternative, right?
So yeah, what's up, everybody? Paul, I don't know if you've set the room or not yet, but
No, I haven't. Yeah, I haven't done anything yet. So
all right, well, looks like we got a good group here. We can get started. Oh, look at you, fancy. Nice.
It begins.
Very impressive.
That's
isn't
cool.
that good? What- technology is just
That's
wonderful.
pretty cool. Well, yeah, guys, I don't think we have anything set for tonight like we did last week. We got a couple things in the pipeline, one being Al. You guys know Al. He's going to do a presentation. And then we have JB, who's going to do a tick specific presentation and how it kind of works in with his process. Then I know Michael, we're going to do another presentation on kind of what we talked about last week and some more risk reward stuff. So that's in the pipeline. But tonight, truly is just an open mic. So if there's any questions, comments, or just want to talk about how great the Jayhawks are, it's cool with me. So, yeah, fire away. And if you guys don't have a mic or not comfortable talking, you can type the question in video chat and I can monitor that for any questions.
Yeah, so I guess I'll go first. So I watched Paul's video, him and Michael's, and really great stuff. Thanks for making that. I was kind of wondering, that motivated me to head over to the Gamma Scans channel for really my first serious encounter with it. And I started reading through the 4 different commands and what they do. But I was just wondering if maybe you could give me the y'all's opinion on how to use them properly, loosely speaking, I guess. I know the documentation says what they do, but I guess I'm trying to get a more visual on exactly like what these things do and how does that relate to the gamma charts that I'm used to running, such as the C commands and the E commands, and the gamma exposure across strike, the wing charts, those all make sense to me, and I'm just wondering how these commands kind of work together with those things behind the scenes.
As an add-on to that, let me just add the question that I have because you can probably handle them both at the same time. So when I ran some scans and charting on some of the oil and gas names on Friday, I got some pretty impressive looking wing charts, but I have no way of knowing just by eyeballing it quickly if that gamma that's there is large enough in terms of OI to actually influence the dealer response. If there could be a little green, red, yellow, or some kind of 1, 2, 3 coding system, or 1 through 5 to just give us a ballpark some way or another, or if there's a way that I could see it that's there that I don't really realize is there, either of the two. So
Yeah.
throw that in. That's all.
I'm just typing these real quick, Doc. I'm not ignoring you.
Yeah, so I guess like maybe for instance, like I'm reading it, it says lower values of the Gex ratio. And to me, I'm just wondering, what does that mean, lower values of the Gex ratio? What are the typical values? I know this is really getting into the weeds, but these are the kinds of things that pop in my head. So that way I can like get a good understanding of what these tools are doing, not just the things that they produce, the outputs, you know what I'm saying? So.
Right. It's a good question. True good question.
Because I've noticed just kind of flipping through the channel there that I noticed that there's more change up, gamma up, and gex to CLI commands run than, let's say, close put rev. And I just, my brain automatically jumps to that, thinking there must be a reason that I'm seeing this trend of these guys who are much more experienced than me running these particular commands. And I'm quite frankly just trying to get in y'all's head, you know, being blunt.
Yeah. Taylor, do you want to?
So I'll go at a high level then, Paul. I'll let you speak to like the specific scans and I guess what they do. But
Sure.
to kind of go on your point on how you link the scans to the charts, like they're all starting from the same pool of information. Like if you have our gamma spreadsheet, like that's all the information that we're using. And so whether that information is manifesting through those scans or the charts, you're going to see the same thing. So obviously the scans are going to take specific parts of that data. For instance, like is plus gex moving up over next expiration, which that may return in the scan. And then if you run like the CC command, for instance, on the wing chart, you're going to see that gex shift up from the first chart to the second chart. So yeah, I think it's just different ways of seeing the data. But then obviously our scans are zeroing in on specific attributes that we've identified as being important, and hence that's what returns the symbols, and those are kind of telling us, hey, these are the symbols that we do need to focus on.
So,
then Paul, I don't know if you wanted to say anything specific about each scan.
yeah, I think there's a couple things there. So everything you said is spot on. So based on feedback, not everybody here wants to be a Excel jockey. And I think it's important to realize that, if you're a gold member, you have access to full spreadsheet, right? And so I think that in and of itself is pretty significant in that it contains the entire database and it's updated constantly, right? So if you go down to the automation channel, let me go over there here real quick.
And Paul, not to interrupt you real quick, but guys, in the garbage disposal today at 5 o'clock, I uploaded like the spreadsheet from today and just kind of an example of what I like to do on a daily basis with that. So yeah, if you guys want to go check that out and see exactly what we're talking about there, it's down there too.
Right. Yeah. So the scanner basically gives you the best of the best here in context of you don't have to use the spreadsheet. You can just go to these pre-canned scans. Now, I think what is kind of different here for you guys is that we have, through our partnership with EdgeRater, we've proven that there's an edge in the scans that you have. So change up, gamma up, gex to COI, and close put reversal all have a measurable edge. And the key takeaway is that rather than having to go into the spreadsheet every day, generate your filters, or paste it into something you already have, we do it automatically for you. Now, and everybody has access to that. All the scanners are open to everybody. So you actually, as no matter what your membership level you have the ability to, get these pre-canned things. Now, this rule that's in there with ChangeUp, which has this ratio thing, this GEX ratio thing. That's call open interest to put open interest. And so let's step back and just kind of think about mechanics here. When we see call open interest or GEX, call GEX, not open interest, but call GEX greater than put GEX, what we're seeing is that there's the sentiment that the market has on that particular stock is positive, and the longer term view here is that this thing's gonna go up, right? I mean, it's a snapshot in time, but nevertheless, when you see it day over day over day, it's an indication that the system is detecting that these stocks that are returned here are in a not only just a positive gamma condition if they're greater than 1, call GEX being greater than put GEX, that they actually have some sense of this persistence of day over day gives you confidence that it's not just a one and done, that it's actually moving. So the change up scan actually is my favorite. It's the one that I pay a lot of attention to. I run it every day in EdgeRater. I'm pointing off screen here because I have it up on a different screen. I constantly run it. And so I think the takeaway is what we're looking at when we see the change up greater than 1 is that it's in a positive gamma condition overall. So to relate it to what the charts and graphs that we're used to seeing here, we're seeing the green wing above the red wing, but here's the key, right? The ratio, the default ratio is between 1 and 1.1. Now,
where do you see that ratio? I'm sorry for interrupting. Is it numerically written somewhere on the chart? Because I must have missed it if it is.
It's actually it's embedded in there, but you have the ability to change it, right? So if you go into the scans channel, Taylor did run. So go into Gamma Scans, and you can see that Taylor just ran the command change up with a $ in front of it, of course, and then the word help. And you can do that with any of the scans. And you can see that it's got a lower bound and an upper bound. And if you look down in the help descriptor there, it specifically says 1.0 is the default and 1.1 is the default for the lower and the higher. And so what this particular one is doing in this particular case is it's effectively returning stocks that are just above parity, right? So why we're doing that is we're trying to catch a stock that actually has moved into a positive gamma snapshot or a positive gamma condition and is at the beginning of that build out, where you're not just completely dominated by calls. Now, if you watched the video today that Mike and I did, you actually saw where this comes into play. Now, we didn't run this test, but on Apple, so the video that Mike and I recorded today, if you watched all of that, you actually saw that the Apple was in a negative gamma condition. And so for all of us here, that means that the put short-term GEX, negative GEX, is larger than the call positive GEX. And in this particular case, we watched Apple day over day shift that balance. And so this would catch those stocks that are going from a negative gamma condition through that 1 to 1.1 ratio with the other criteria that you see, if you go check in the Gamma Scans channel. And the takeaway is that we want to be able to capture those stocks that are on the move. Now, there's other ways we could capture that, but this is one of the easiest ways off the spreadsheet. And you could go duplicate this. If you're a gold member, you can go grab and set up your fields just like this, and you should get exactly what gamma scan is returning, right? Or what changeup is returning. You should get the exact same list. Now we've gone one step further for you. We've also integrated best ETF as well as the sector that's associated with that stock. Now we don't have we've gotten some feedback on this. You know, there's some that don't have any information, right? So it doesn't have return the best industry or whatever the case may be, or the ETF isn't listed. We don't control this. This is from our data provider. We have zero input except to let them know that they have a quality issue, or they just don't have it built out. We've let them know this. You know, we're a small cog in the big picture, right? But when if you've been watching this, and if you go back in time, and I think this is the takeaway for everyone here, when it was really hit, these are long scans, right? These are long only type scans. These are not short scans. We're working on short scans, and you'll have short scans after John comes back after his honeymoon. But for now, when the market was tanking, the list got very short. Stocks were not meeting the conditions. And so you saw these lists get smaller and smaller and smaller, which is really good. More importantly, if you go back in time and you take a look at these lists, and they're all there. The history is there for you guys to go back and take a look. That's one of the nice things about Discord. You can go back in time and see the way things were a few weeks ago. You will see these lists start to grow as the market started to turn. That's pretty cool. At least I think it's pretty cool, because we saw the GEX to COI list explode, right? We saw as puts were being added in to a whole bunch of stocks, and we saw those ETFs, that best ETF moniker, XLK, XLV, etc., just start building out the numbers of stocks. We have a counter at the end of those. And the number of stocks that fit that ETF or fit that sector are all counted out for you. So you should be able to display in the Discord when you run that, when you run those scans. There are a couple additional files that list out down below that, and they show the sector or the industry group, and they show a count, and then it's all sorted by count descending. So you will have an idea of the sector rotation or industry group rotation and the number and the ETFs that are corresponding to those. At a bare minimum, you need to be looking at those ETFs.
Okay, so when you're saying counts in the list, is that counts of stocks that are within the output set of the changeup command?
Yeah.
Or,
So
Yes.
let me share my screen here. I'm going to turn this. Can everyone see my screen?
Yep.
yes.
All right. Okay. So when you take a look here, what's really important is you can see, and everyone, if you've updated your app on your desktop, you should have these automatically expanded. We had a few users who these were collapsed as files and they weren't showing, and all they had to do is download the more recent version of Discord, and it fixed it for itself. So, you know, you run this, and this is obviously this list is huge, right? And yeah, you can go screen it over by clicking on the blue hyperlink here. It'll take you to FinViz, and you'll get all these, and then you can do further screening on it. But let's not go there right now. Let's just say right here it says ticker, sector name, and best ETF, and you can see that each one of these now is listed, and it's listed in the order that was provided here. Now, just incidentally, a question did come in. I haven't updated the FAQ about this. What's with the order? If any of you are familiar with Minervini, Mark Minervini has a screening criteria, and he calls it the trend template. And basically, this is a version of my version of how we implemented Mark Minervini's trend template in here. It's been changed a little bit. John, who just got married yesterday, added a few little tweaks that he has, but nevertheless, AON is at the top of the list. So if you're familiar with IBD stocks, if you're familiar with Mark Minervini, you're going to see AON at the top. So AON is an XLF, and you can see as we go on down, here's that list, right? So just going down to town here. Now we also take that list and we say XLK's got 40, got the highest amount of basically these ETFs fit into an ETF. If they have the largest position in that ETF, they basically get ranked as you see here. So XLK, XLF, IWM, XLY, XLI are all containing very large amounts of these stocks. So if I were not even wanting to go look at specific stocks, I could start right away with looking at the ETFs.
So when you're saying, let me question. So XLK contains 46 of the stocks on this list.
That's correct.
Out of how many in XLK?
Good question, Doc. I don't know the answer to that, but effectively, the best ETF in a correlation basis that fits the performance of these stocks and is with being held in XLK. XLK is being represented by what you see here, right? So, so the idea behind this, the reason we did it this way, give you the list here of what sectors, so you can watch that, and then down here give you the actual sectors, right? So XLK 46, which is technology, financials, IWM obviously small caps, XLY. I forget what XLY is. That healthcare? XLV is healthcare. I forget what XLY is. Consumer, I think, discretionary.
Yeah,
whatever
it
case
is.
Yeah.
So, and then, you get the idea here. And then down here, we actually also classify these information technology, 25 of them. The 0 means they're not being assigned, right? They don't have a sector when we query the API. We have no control over that. I know a few of you have complained about that, and what's the 0 mean? It just means there's nothing there. But so there's 22 here that are not being classified into a sector. We've notified our data provider, but obviously it hasn't changed. When it changes, we'll not see a 0 there. Consumer discretionary, healthcare, finance, et cetera, et cetera. And so you get an idea of what's hot with this particular thing. So by understanding what GEX to COI is, right, where we have positive gamma actually moving up towards the call open interest, which is actually a really powerful thing. The back test on this is significant. And when we see this, we typically see this work in an expanding market. It's worth paying attention to. And you can go back in time here, right, and you can see gamma up being what the literally when we see a shift upward in gamma levels, change up we've already talked about. Sometimes we don't get anything, like closing put reversal. You can see there's only one symbol here, right? So okay, there's only one symbol. Nothing we can do. Sometimes it returns 0. It's just kind of the nature of the beast. So they're listed across the top here, right? So gamma up, close put rev, GEX to COI, and change up, and we'll keep adding them in the descriptor as we go up. And then you can type help. I think I saw somebody here. Actually, yeah, here we go. Here's the help. So if you just type scans help, you get kind of that short descriptor you were just describing there, Panther. Okay. So, Paul or Doc, I know you had asked, is there, is there a way to do a coding system? There is, of course. I mean, we have all the raw data. We can do anything we want with it. Probably would need to talk with you a little bit more about what would be most useful. Sure. I think, to your question about which ones would have the dealer response. So if I go over, for instance, here, I'm going to open it up on a different screen. I'll drag it over. So, so I just clicked on that blue link. It brings in, all the symbols. And then if I wanted to just, for instance, I want to be price above the 200 MA. here they are, and I could start doing whatever I wanted to do here, right? So I could add, for instance, a little bit of noise there. Whoever just joined, if you could mute yourself, that'd be great. And so, the idea behind this is you can now scan these fairly quickly and take a look at the ones, and you can add your own, own criteria, go to all, and you can figure out what you want to do there. The nice thing about this, it can help you figure out, Paul, to your question, which ones are going to have the greatest chance of having a dealer reaction. And I would say the larger the volume, typically the larger the volume, the more the chances are they're going to have a response. I would also say that, I mean, we could also add criteria if you guys don't like dealing with a big list. We could certainly add criteria that would, basically allow you to, you know, over a meg here, right? So here's over volume over a meg. That's a lot of volume, by the way, right? So even these are going to most likely have a dealer response. Here's over 2 meg, and you can start looking at the lists, and you can start seeing what you want to do. So there's a real easy way for you guys to take this big list, obviously, that you see here in GEX to COI, and start filtering it down to stuff that you like. We do include, if you type help there, the help symbol here does give you the criteria. The Gamma Up does have a 500K and above on OI. We don't do volume. We could certainly add something here, but just, and you can see 500K here, right? We could certainly add something to these to, continue to filter them down if you think they're too much. We don't want to choke the opportunity for you guys to find trades, but, the worst thing that could happen here is you go down, for those of you who've got, access to the gold stuff here, you could go down to the Gamma spreadsheet and open it up yourself and, go play. So there's probably,
for example, this morning I ran some scans and I looked at Home Depot, and we know it's been trending down and it's got a big red, lots of negative damage in it. So I'm wondering, how much of a dealer response is that going to force versus, say, an Apple or Nvidia? I mean, I know Home Depot is fairly, heavily traded, but how much is that gamma really going to pull it?
well, that's another question.
$1 million question.
Yeah, so that's actually a really good question in context of float and how much is the open interest. Yeah, so
we've had that discussion before.
We have had that discussion before, and we have identified the there's two things. There's obviously float, and then there's short float, and we do have access to that information. So now the question becomes the ratio of the open interest volume to the float, and obviously the greater the open interest manipulation is to whatever the float is, the expectation, this has not been proven yet, the expectation is that would have a greater influence on dealer dynamics. But remember, the dealers don't have just one, well, an individual dealer may, but a company, a dealer company, think Citadel, think Goldman, whoever. They don't own just one symbol, or they don't make a market in just one symbol. They actually make markets in hundreds of symbols, if not thousands. So it all fits together. The question is, what do they need to trim in order to trim the risk? And Paul, to that question, we haven't answered that yet, but we will give you an indicator after John comes back off honeymoon, to effectively now start be able to understand what is the float and short float compared to the open interest.
Something simple like 1, 2, 3, 4, 5.
Yeah.
If there's somewhere I see there's 175 calls or puts, I know it really has no response. I can't tell that from looking at the thing.
No, I I absolutely understand, and I agree with you. I will say I can see here where you ran it this morning. You know, you basically ran the this scan, and then you ran basically you wanted to look at the expiry for the next 20 days, restricting the price. So basically, you wanted to see what was the gamma over the next 20 days, and you isolated it with the $E. I think this is telling us that we're basically all the stuff to the left here. Here, let me show this so everyone can see it. Everything here to the left is considered out of the money. This is just the in the money stuff here, right? And this is net gamma, by the way. And you can see you have a lot more net gamma, negative net gamma, than we have in positive gamma. But we're very close to the zero, right? The zero is at 315. 315 is going to be, it's going to be right in this area here. This is probably 317.50 here, and then 320. So as we get into this range here, we're kind of at that fulcrum or that balance point or whatever. And so I think, to a large extent, if Home Depot, to me, over the next 20 days, because the way you ran this, the way you structured this right here, right? So the 0 through 20 isn't really giving up a lot of gamma, or what is expiring there's not a lot of pressure here, is what this is telling me.
So I mean, you know me, I'm looking at 295, 285 put spread or something like that.
Yeah, I think with this wall here at 300, I think that's a very viable.
Or maybe it was 290, 280. Forgot, I was playing with different expirations.
Yeah, this looks to be the 95. This looks to be the 90, 85, 80, right? So, I think you're line in the sand, obviously, because you've got in the expiry, right? You've got the highest put gamma, negative gamma is sitting right here at 300, and then you've obviously got this 325 here. So, if you can sell for anything up here, you're probably safe. If you can sell for anything down here, you're probably safe. And your line's in the sand for closing, all things being equal, depending on what your credit is. As this starts walking down, obviously you're going to be losing some money, so you would get out. But a break of 300 would be your absolute last line in the sand. You're in trouble, right? Because this is a wall. This is a clear. It's a Livermore number, first of all, ends in 00. That's a big deal. It's the hugest. It's the largest put open interest, and it's also got the highest negative gamma for the structure. So for me, a breach of 300 would be catastrophic for Home Depot. I would be shorting it like no tomorrow if it broke 300.
Or by
But on the flip side, if you were to see the calls, the call gamma building up and the spot price moving up towards 0 gex, then it could be a totally different situation, right?
It could be, yeah. I mean,
I'm not saying
there's
it's going to happen. It's just a arbitrary hypothetical,
Yeah, I mean, if you just run.
I mean, even with nothing much changing in the option structure, if it moves up in price, suddenly the GAG shifts.
It does shift, but I'm going to tell you right now, just based on what I'm seeing right here. So this is the current wing structure for everything, right? It's not filtered. CheckNav ran this, and so this is the unfiltered, all expiries, all gamma, which is safe. You don't need to filter anything when you look at this, and the reason you don't need to filter anything when you look at this is because gamma is sensitive to days to expiration. So this is a true representation of all the gamma that's in Home Depot right now, that any of the dealer exposure. And you can see that there's that 300, and here's that 340 sitting right here, and you are dominant on the negative side here. So, to your point, Panther, if price and Doc, if your price comes up, yes, I absolutely agree. This is a price. GEX is price sensitive, no question. But you can tell, even though these are going to grow, no question, and these are going to shrink as price moves up, you can see there's some areas here where there's just pockets. There's just no liquidity there whatsoever, right? So
yeah,
you've got some
like
good
around that 320 area, something like that, 330.
Yeah, so I mean, you can look at that, and then you can see, all right, after the expiry. Remember, the second wing chart here tells us about what's coming up with the next expiry, right? So it basically removes removes all of the open interest that expires this week, this Friday. And basically, you can see the picture. We start seeing the emergence of some call gamma here with basically we're starting to see um, the call open interest and the looks like it's still at 340. Yeah, the call GEX is still at 340, but we're starting to see now a growth here of open interest, call open interest. That's even closer here. Now think about what that really means, right? So if we can get above this call open interest, even though this is long-term dated, right? So this call open interest does not match the GEX, the call GEX, the call gamma exposure. And the reason is that this is shorter term dated. So people are expecting, for all intents and purposes, they're expecting that price is going to move higher. And all of a sudden, all this dominance that's sitting right here with this green line up here at the COI is not going to be in the money if we can get above this 320, right? So there's 10,396 contracts that are sitting right there at 320. If we can get above 320, you could see this thing start to run, right? Because, first of all, think about what's happening. Even though it's not a gamma related thing, the deltas start changing on these contracts, right? Because instead of them, as you get closer and closer and closer, remember delta's 50, midpoint as at the money, right? And so as you start moving higher and higher in the strikes, the deltas here get longer and longer, right? So they go 60, 70, 80 delta. And what that means is that the dealer is getting short those deltas. And what does the dealer have to do if the dealer is getting short those deltas? As price goes up, the dealer starts buying.
Yeah.
And now the other thing I noticed is we have those, I'm going to consider them in the money puts above spot.
In the money puts above spot, yeah. So you've got, well, this is net gamma, right? So got that. Let's go
I'm
back.
assuming that, I mean, it could be short calls, but I'm assuming it's in the money puts.
Well, yeah, I mean, let's be candid here. We don't short calls and short or long calls. We don't know the
But we don't
size
know, right? We don't.
because the OI chains only tell us positive open interest. But for the most part, you would see short puts higher, and that would just subtract. Ideally, it would just subtract from any put gamma that was up there, because it would appear as a long, call open interest that's up here. But for the, again, all intents and purposes, most stocks don't have a tremendous amount of overhead short calls that are on the retail side. They do on the dealer side, but not on our side, right? So we, as traders, we YOLO with our long calls, and that causes the dealer to be on the other side. And if it's an opening trade, it's an opening trade. It's just kind of the way things work. So you can see, though, in just looking at how this is distributed, we did close below the zero. I actually think that's somewhat ominous for Home Depot, but there is some negative gamma, net negative gamma, that's sitting up here, and you can see that positive trend sitting at 332, and it's sitting underneath 332. So there still are pockets. I mean, we saw it. Look here. There still are some pockets in here where it's pretty ugly, right? So even getting up above this area doesn't necessarily guarantee we're going to race like a wild abandon up to
That makes sense.
right. Okay. I think we've covered your question, and Doc, did we cover your question?
Yep.
We'll follow up in the voice chat. A real simple one. It's just on the change up. I didn't realize running the help gave all the criterias.
Yeah.
I didn't see that in the scan help document, but that's okay. So the only one that's really kind of, I'm curious about is that one that's highlighted in that photo that I pasted.
Okay. So basically, this will be, is this or 4. Right? So basically, we're just saying, are we above the 0 or are we above positive trends? So basically, we're just making sure we're in the positive half. That price is in the positive half, right? So that effectively is the percent change. Do you understand what percent change what this means?
Oh yeah. The condition 1 and 4 are fine. It's what with condition 2 and 3. What's special about the X ratio greater than 1 but less than 1.1?
It's somewhat experimental based. We ran a whole bunch of tests that looked at different ratios. When would be the best time to catch that transition? So, for instance, when we were talking, let's see what I got here. So today, right? So this was from the presentation, the video that I did, right? And so you can see for Apple, negative
We're
gamma.
still seeing your Discord.
Oh, you're still just seeing Discord. I'm sorry. Let's change that. Change windows. Let's go to screens and let's go here. Hit live. All right. Can you see this PowerPoint presentation?
Yep.
Okay. So what the change up criteria allows you to do, right? So basically, it's looking for more or less this type of condition, right? Where they're balanced, maybe a little bit larger. So Apple had on March 15th, you can see where it came from the 14th to the 15th. And so basically, it's trying to catch the move up in positive gamma relative to a drop in negative gamma, right? So that ratio of this to this is that 1.0 to 1.1. Now, if you wanted to substitute for your own test 1.2 and go down to 0.9, you're not going to do any damage, right? I'm exaggerating. This isn't 0.9. This is worse, but you get the idea, right? 0.9. Remember, because it's call gamma over put gamma, right? So if it's less than 1, then put gamma's got to be greater, right? So greater than the call gamma if it's less than 1, right? Because it's just a fraction. So the idea here is that, at least they're at parity. That's the 1.0, where call gamma equals put gamma. And then up to 1.1, you allow it to be a little bit bigger, and you can see that right here, right? So, and then you can see, for instance, as we go through time, it got bigger and bigger, right? So we wanted to catch it. The buy signal would have been literally as you're moving through and pushing up. And that's really what we were trying to convey today in that video. I know I'm off the ranch here a little bit, but this should help you. You're trying to catch the transition like we saw on the 14th of March and catch the stock as you see a whole bunch of puts going up and calls, or a whole bunch of calls going up and puts reducing, which we took as
That makes a lot of sense.
bullish sign.
Because I was wondering, like, what's special about those levels, and it kind of seems like it's at a decent, like you said, it's empirically derived, but I think it also kind of keeps you out of those scenarios where you might be chasing either the upside or the downside.
Well, that's exactly correct, right? So you just nailed it, right? So if we advance through Apple, right, and so the takeaway, if you go all the way to the end of the movie, I know it's 20 minutes long, and a lot of people don't want to watch that. But it's important to understand this, right? So where did we end up? Where have we ended up for tomorrow, right? So tomorrow, we saw a lot of monetization on Friday, but we didn't see any change here. Does this suggest? I mean, the magnitude that we fell. We were at 100. You can't see this probably. It says 175,000. Just take it as a relative number. Let's not worry about the units or any of that stuff. We saw a huge jump from 120,000 to 175,000, right? And so we saw a huge push on short-term gamma get driven into Apple on Thursday. And then by the end of day Friday, this is what we're sitting at. We had a monetization and the expiry, right? So we had a large number. This number is 100,000. So 175,000, 100,000. So we dropped a very significant amount. So the GEX ratio, by limiting it between 1 and 1.1, you avoid getting just the ratio here. You avoid actually getting the pullback, which is the reversal scenario. You got to think about where you could be. If the market model starts to fail over, then this number is going to continue to come down, right? And so that's why we have the other criteria in here about positive change, zero GEX going up, or positive change, positive trend, or percent change, positive trends going up, as part of the and statement that's involved in here, because what we want to see is we actually want to catch the overall transition as it's moving up in the overall system, and catch it in a very narrow range so that we can ride it up. And that would have been literally way back when the market model looked like, let me get back to that screen. Again, this is from today's presentation. So the 15 close would have been the 15 close. It would have been right at that transition. 15, we saw a higher high. This is right from my morning call video that I do. Right, this is the presentation thing here. We said, we don't know, right? We had just been falling for day over day over day. We had no clue whether this was a reversal as of the end of 315. What did this tell us, though? This told us that on 315, Apple actually pushed higher, right? So this could actually be a great thing, and we saw it appear in the scans. If you go back and start looking at the scans, Apple started appearing, TQQ started appearing, and then then the rest, as they say, is history, right? And all sorts of stuff started happening where we just kept building out, and you can see how the wings just continued to build out. So that was really the whole idea behind this.
Yeah, that's really awesome. Yeah, thank you so much for going through all that. It's very all crystal clear to me now, and definitely gonna start paying attention to those scans a lot more, because that's good stuff, But
and I know there's a lot. I know there's a lot here, and when you run these scans, it can be, you're like, oh my God, what am I supposed to do with all this stuff, right? Well, actually, it's not necessarily. It's not as intimidating as you think if you start with the sectors, right? Look at the sectors, look at the ETFs, look at how they're starting, and then go, do your research. Which ones are really, what are the leading stocks in these sectors? What's causing them to move? Right. And if you're scared to get in and pick a symbol, start with the ETF. And as many of you have heard me say in the past, if you can't make an ETF work, you're probably not going to make the stock work. So start with the ETF. It's a lot more forgiving to you if you get it wrong. And if you get it right, yeah, you're not going to get all of the gains that an individual stock may give you, but you're going to move, right? And especially with when we see this, all of these have this GEX to COI, all of these ETFs. Now, if the ETF's listed, then it's even a bonus, but we're giving you the stocks that formulate this, and those stocks are starting to move maybe before the ETF moves. So start looking at that.
That's awesome.
We should be able to just literally limit our risk here with this approach, right? And that's really
for sure.
this
So
idea.
totally uncoupled perspective from, let's say, like a TA perspective or a macro perspective. I mean, it's its own, in and of itself, it's its own element. So to me, this is like super powerful stuff. So
Agreed.
I'm really excited to jump into it.
Yeah, I mean that's kind of where we're at too. Taylor, did I hit all the high points you like to hit?
I hit the high points, man. You hit the
Taylor's still on.
nitty-gritty points.
Yeah,
Oh, I was muted, my bad. No, I said I hit the high points. You hit all the nitty-gritty points. So, no, I thought that was great.
Me and Paul's brain think alike, I think, the more I know him. So
That could be a dangerous thing, so be careful. All right, so that's that's kind of that. There's a lot here, and guys, gals, we're the first to say we know there's a lot here. And the best way is just to jump in and start asking questions, right? So, Panther, I appreciate you, taking the time to voice
yeah,
your questions. Yeah, no, it's good.
yeah, I got another thing, but I don't want to hog the floor anymore. So it's on a separate topic.
Okay.
Tradytics and options fanbot. I've been messing around with that, but
Well,
Yeah,
we can see if we
we're
get any
still
more.
on some of that. Yep. Go ahead, Taylor. I'm sorry.
I was gonna say we'd see if anyone else has a question. If not, then you can fire away, Panther.
cool.
I know there was some questions about the JPM hedge. I forget who asked that.
Oh yeah, that was earlier in the week. I forget
Yeah,
too.
yeah, it was earlier in the week. I don't know if that person is on or not. Well, just so everyone has an understanding of what that is, let me go ahead and I'll open up Option Station Pro here, and let's just talk about it, because this is the week, right? I mean, you guys got to be aware of this, even if you don't drink the Kool-Aid, which I'm not saying you have to drink the Kool-Aid, but you should probably be aware of what is happening under the hood, right? So there's a couple things here that I think are fairly important. Every morning, we post in the gold index, and certainly everyone, read the PDF that comes with the morning call in there. I intentionally spend a little bit of time talking about the different expiries and the overall gamma that's going to expire with each one. And if you don't know what I'm talking about, go up to the morning call, and all the PDFs since we started doing this about a month and a half ago are there. Now, you'll see reference in that PDF to the JPM hedge. You're probably thinking, well, what the heck is the JPM hedge? Anybody here know what the JPM hedge is? Speak up. Seriously, speak up.
Do you want me to tell them what the JPM hedge is?
Tell them what the JPM hedge is there, Doc.
Okay, so JP Morgan has a very large hedge fund that hedges market risk. So it's a downside hedge where it's basically a risk reversal where they sell calls out of the money. I think it's 3% out of the money, roughly, and they buy put debit spreads roughly 200 wide, around 5% out of the money as a hedge against their, for their larger clients. It goes on quarterly, so the JPM hedge is set to expire on 3/31, with 4510 is their long put strike, which had been deep in the money and is now out of the money. So now that's positive gamma versus negative gamma. And the closer that gets to expiration, the more influence it could potentially have. And so it's going to expire and a new one will be set. And so the question is always, how disruptive may that be or not? And they've done a pretty good job of it, making it not very disruptive to the markets. However, they do that through the back channels, and they kind of put on a little temporary 1 day counter hedge or something, and you kind of can, if you do like I like to look in the open interest and see the actual trades and the volume, like around that day and the next day. But that's what the JPM hedge is, and it kind of roughly gives me an idea over the next quarter where things are likely to possibly what range we might be in. Of course, it's not set in stone. There's headline, there's all kinds of other stuff, but it just gives me a ballpark. And as we get closer to it, then it gives a much better ballpark, say a month out. That's the JPM hedge.
Correct. That was a good summary. So why do we care? So anybody want to fathom a guess of why we care? Doc, you can't. You've spent your bullet, so Doc, you got to sit on the sidelines. Why would we care about something like this? And I'm showing my screen right now. You should be able to see a profit and loss graph. Anyone? Going once?
I'm still thinking.
Because of its size and the dealer response that can generate from it.
Yeah. Yeah, I think actually you simply said it. I think the price of where we are, which is shown right here, this is the current price of where we closed. In a second, okay, is where we are in relation to these knees. So let's take what Doc said and let's put it in a graphical form so everyone can kind of visualize what's happening. So the mechanics are really important, and if you were to just Google JPM hedge and look at what they call the quarterly roll, you'll see this is the collar that they put on. This is a long put, and it's at 45.10, and down here 45.10 right here. This is a short put, and it's at 38.10. And so when they put this on, right, this was 5% down below the closing price on December 31st. So they basically had this, I don't know, flat range. And then down here, this was 20%. And so what they do, and it's not exact, but it's pretty darn close. 5% and 20% down, whatever the spot price was on December 31st. And then what they do is they adjust. This is a short call, and the short call in this case is up at 49.20. And by selling the call, they pay for this. And so you can see they're flat in a range. It was 3.5% to 5% above where they were, and then 5% below. And then they make money if, in this case, if the market falls from 5% to 20% down. And so you say, okay, well, what's the big deal? Well, let's just say they're long and they're 100% hedged. Let's just say they're long the SPX, and don't worry about the losses over here. And so what I just did is I added in 100 shares of the SPX, and so they're effectively hedged. So when they put this on, they basically had exposure to the downside up to 5%. Below where the price was when they put it on. They could get gains of 3.5% to 5% per quarter to the upside. And then if the market fell more than 5% relative to the day where we closed on 331, you can see they would be flat. All right. So this is not liquid. So here's the first answer of why we care. Right? The first answer of why we care is that there are 43,000 puts sitting out, long puts, on our side of the table, on JPM's side of the table, sitting at 45.10. And you say, okay, they're not liquid. JPM does not adjust these during the quarter, but they are sitting there, right? This is a big deal because as price moves around these, the delta exposure for the dealers moves and the gamma exposure moves. So let's go take a look and see what that looks like. When we take a look at the gamma exposure for this, you can remember we were down here for a while and this white line was really flat. but it was flat down here. It wasn't flat necessarily. We're getting closer and closer to the expiry. So what you're looking at here is you're looking at this white line here is right now, like opening tomorrow. The green line you can see is March 29th, and you can see this orange or brown line is March 30th. So we're getting shorter and shorter, and it's getting more peaked. And then the blue line is where gamma eventually collapses to. So as we get into this week, gamma has a big deal because it gets peaky. Gamma is maximum at the money, where this line is right here, right? And as the days to expiration get shorter and shorter, whereas a month ago it was flat. And I posted some charts. I've posted charts over time. You can go back in the channels and look for them, or I've got records of them somewhere, so I can post if there's a lot of interest here. Now, why we care is because there are different and competing views out there. Gamma is 0 here. Gamma is 0 here. Gamma is also the change in gamma is 0 right at the maximum of this white line. But you can see it gets the range I can move and have a line tangent or a line. Here, let me do this. I'm just going to hang on a second. Bear with me here real quick. Just do it this way. It's a little easier to draw. If I were to take a line and just draw it across here, right, you can imagine that this slope is 0. And so as price moves down here, the dealers don't have to do too much. They know what the gamma is, and they're kind of dealing with it. But you can also imagine that if I'm up here, the same dollar change down here around this 45.10 is less and less. And so they're sensitive. Gamma falls dramatically off of 45.10 here, which is important to understand here. So you could say, well, why wouldn't they go down here? They might, right? There might be a drive to go south. I don't think so, because we're in a positive gamma condition and everybody's starting to push high. And we certainly aren't going to go up here to 4,700 by 331, or are we? We don't know, right? But you can see it's a race of time, right? So basically, the level of gamma flattens the longer you have in days to expiration, and the dealer exposure is roughly constant. It's called speed. The change in gamma is called speed. It's a derivative. And basically where speed is flat, our theory is the dealers kind of like to hang there. And you can see where they're hanging right now. Now, other market pressures pushed us over 45.10. If you watched last week, we actually hung out right at 45.10 for a while, 45.10 and 45.20. There's a reason for that. And it was because of where we were. Speed was flat, et cetera, or at least that's our theory here, right? So we're thinking, as we go into the expiry, there's going to be a push to where gamma is either going to, go one direction or the other. We're on the right side of the curve, right? This is a decreasing volatility environment, and you can see the slope is pretty steep, right? As we go up as the days to expiration get less and less into 331, you can see we're almost forming our own little gamma wall to the left, where it's going to be really hard to go down. Doesn't mean we can't. I'm just make sure everyone understands. We could certainly pull back and get trapped on the other side of this. I don't think it's going to happen, though. And the reason I don't think it's going to happen, there's been so much other activity around the gamma levels that what we've seen is a neutralization of this 45.10. I'm going to call up here. I've actually got it probably from the other day. Let's see. What did I put out? Here we go. So this is my presentation for the morning call on Friday. And so here's Thursday. And this is important, guys. I want you to look at this. This is why we do what we do. This was Thursday morning, and basically we had this large expiry of net negative gamma sitting here for 331. Look what happened with the action of Thursday into Friday morning, almost neutralized. Right? Now, I haven't run the numbers for tomorrow yet for tomorrow's morning call. I'll do it after we get the OI updates in the morning at 7:30 Eastern. But we had a positive day also on Friday. I'm expecting more positive gamma to exist out there. This vaporized, right? This expired Friday, and so I'm expecting these numbers to grow, and I'm expecting this to get less and less. That means a lot of the gamma that's out here is already neutralizing what we're seeing here, and that goes back to what Doc was saying, is that there's a lot going on behind the scenes, not only on 331, and they will adjust for whatever new stuff they put on, but they've also been adjusting and neutralizing the overall impact of this so that the dealer exposure is more or less spread across. And I think that's what we've been seeing. So, how do we trade off this? Why would we even want to know this? Well, these levels are not liquid, right? So going back to what I was talking about, these levels that we talked about are not liquid. But what they are is they are pinning mechanisms in, and you can see where the gamma was, right? And let's just look at delta. You can see how they impact the dealer position. Now, this is JPM's perspective of delta, right? So JPM, as we get closer and closer, they're going to have zero delta here. They're going to have minus 100 here, minus 100 here. The dealers are going to be on the other side of that. So you can imagine when you cross a delta transition, that 4510, the dealer's part of the table changes, right? And you can see how it changes, right? Now the dealers are starting to get longer and they have to compensate. Or JPM's getting longer, the dealers are getting shorter, and so to compensate, the dealers start pushing up. And so think about this. Think about what's happening here, right? We've been watching this push upward. JPM, right, as the price goes up, right, the deltas here are in this case, from JPM's perspective, they're getting longer. JPM's getting longer. Basically, they're going from a negative delta towards zero. Their book is getting longer, right, less short. That means the dealer, flip this chart, is going the other direction. The dealer is getting shorter. But as price moves up, what does the dealer have to do if they're getting shorter? They have to buy. So we grind upward, and that's exactly what we've been seeing here for the last week. It's exactly what we've been seeing. So I would offer to you, pay attention to where these pinning levels are. We've seen this. Doc and I have been doing this, and Taylor have been doing this for a while. We've been following this JPM stuff since last summer, and these always rear their heads in the couple weeks coming up on expiry. So how do we go forward here? So on Friday or on 331, when this finally rolls, we know definitively, that they are going to do a long put 5%, whatever the price is on 331. We know they're going to do a short put down here, 20% below. That collar will have to get paid for something here. So we can estimate where all of these are going to be. And then they may tweak it at the end of the day. They usually do. Move it a strike or two either direction and adjust. But once we know those numbers, those now become the numbers for the next quarter for us to pay attention to. And then if you go down into our channel here and you go down all the way to the bottom here and take a look in where is it, media, in tweets, and you look at Tim the market maker, wherever Tim the market maker is. Where's Tim? Here's Tim. You need to follow Tim, right? If you're not following Tim in our Discord, follow him on your own, because Tim actually tells you about different things that are going on in different structures that are going on, and I model those. Everyone should model those big ones. 7,000, 10,000, 15,000 contracts of the SPX. It's relevant, right? And so if you model those things, you get a pretty good idea of what is ahead of us and how it influences speed, the derivative of gamma, where gamma is, where delta is, and where those transition points are. So I know this was a lot. I know this is like drinking from a fire hose, but this week is going to be an important week. We could either see the wheels come off the wagon, or we could actually, have a nothing muffin here and just continue, doing what we're doing here with no real major changes. It looks like, so we were up at 47 and change when this happened before. We could push up to 46 this week, right? If we push from here to here by 331, doubtful, but if we do, then you could see these numbers come down a little bit, right? So instead of this 49.20, we might be down here in 48 for that short call, and you might see these slide a little to the left. There we are. One final comment, and Doc, step in here. You and I had a conversation, and we were thinking at one time that low strike, and it was about a month and a half ago or so, that 38.10, we thought that was what they were targeting, right? Because of what we were seeing, and that the gamma exposure was pretty significant down there. And there was a zero down there, right? They're, again, taking this off. At that time, there was a zero sitting down here. The way this white line was curved down, this keeps tightening up this way as we get shorter in time. You can imagine a month ago, all of these transitions where they cross zero were out down in this area. We thought that's where they were headed, where the market wanted to go.
But if you also remember, and it was about a month ago, I was saying let's sell 3,800 below that 38.10 puts because of all that positive gamma with those short puts, and we got some pretty decent premium then for
Yep.
even like a 10 wide when VIX was so high.
Yep. No, you're absolutely right. It was a great trade.
And now,
Great trade.
getting back to what could potentially happen, I guess this view would be good when you were showing like the slope of the line and all that and the speed.
Yeah.
If we start to go below 45.10, yeah, that one, in a meaningful way, then it looks like we kind of could theoretically at around 4,400 or 4,300 would be kind of where the dealers get neutral again. Where it flattens out. Yeah.
Yeah, no, I think that's right there.
Right.
That
So again, from my perspective as a premium seller, I would look, well, let's see, below 4,300 for Friday, what's there?
right.
Just saying how I tend to use this kind of thing, which a lot of people, not everybody does it the same way.
No, I think, and I think you're making my point for me in a different way. It's highly unlikely we're going to go below these zeros, just from a structure point of view, right? So that's why I think it's important for us as traders, if we're going to trade these, and the SPY is linked to this, right? They're all interrelated. They're not exact one-to-ones, but the fact that you know where the zeros are for these largest trades, these are foundational, concrete cornerstones in the overall market. And we're bound. I mean, we're not going to see a rip down through a zero. It's very, I haven't seen it in the year or almost a year that we've been following what the impact of this JPM thing is. I just don't think it can happen, right? Because I think the dealers would not, going from up here to down here, the adjustments would be catastrophic, right? So we will have plenty of warning if we start sliding down the slope, and we'll be able to play that as necessary. So
is the higher zero 46.75? I'm watching it on an iPad, and the numbers are small.
So this highest zero is sitting up here. Let me go back over here, Bart. Hang on, and thanks for joining, by the way, Bart.
Yeah.
About 4,700 or so. It's right in that range, right around 46.93 or so on the high side, and it looks like we collapsed right around 4,300, 42.80 on the low side. So you can see they all start to converge in this area. So I think those are really safe areas until at least until 331, and then there's other stuff behind this that that we haven't talked about tonight, but you get the real idea about where that flatness is and how everyone here, if you're still watching here, right, you can see that you can tolerate gamma exposure doesn't change. It's constant across this range where I've got, the white line, but you can see it, that same flatness that would exist here doesn't exist up here. It's a very narrow range. And as we get into 331, this gets more and more peaked. And so therefore the ability to fall, it literally
Right.
becomes
So,
a wall.
if we don't get big exogenous events this week, and tomorrow and the day after sort of aren't that exciting, you could say this will be a slow moving week.
I think we're limited on the downside into the close of each day above 45.10. I mean, unless we get, something happening in Europe or whatever the case may be. So yeah, I think you're right. I think it's a slower week. I also think we're bound on the upper side, right? I don't think we're going to get much past this point. I could see a gamma zero here, especially as the roll's coming, but I just can't see. I can't see us blowing past it up into here, and I certainly can't see us falling a dramatic amount. And by the way, just so everyone knows, the slices are at 1 standard deviation for the 331, right? So this is 1 standard deviation between these points. So 2 standard deviations is the black zone here. That's a highly improbable move between now and 331. So just so everyone has a kind of context of what you're looking at here, it's just not likely we're gonna see the zeros of the gamma model.
And I think we're not. I think we were sort of very oversold a while ago, and now we're getting close to near-term overbought, which would go along with the market sort of consolidating here in this range and not moving a hell of a lot one way or the other. Again, excluding some sort of exogenous geopolitical event or some Fed speaker saying something beyond insane.
Right. Well, I think so. So the key takeaway for everyone, right? So I know we've been going on now hour and 15 here, but I think the key takeaway is that we're over this major area. We're to the right of that zero, right? So or that long put, which is sitting here at 45.10. We're in a overall, and this is kind of what I was showing on the overall markets here. Again, just looking at Apple, for instance. Let me go down to the bottom here so we can all see it. Apple's in a very dominant positive gamma environment, and you can see this is Friday's cumulative tick. We're above the moving averages, which had been a historical reversal points. We're staying above them. We're not advancing, and that's why I'm a little cautious. And you'll see in my morning call tomorrow, I'm going to leave the yellow on here. We've hit these kind of highs that we see here. We need a continuation tomorrow and Tuesday to kind of break the thing here. But if we stay that, now think about what's happening, right? So let's go back here so everyone gets a real good idea here of what's the deal here. So what's key here is that we're looking at basically, and let me turn this part off here. We're looking at gamma that is effectively, or delta that's effectively collapsing from a negative value on the JPM side towards zero. That means the dealers are getting going from a positive value towards zero, and when that happens, right? So they're getting shorter in their book as price, it just cranks up as it just, if any of this is true and we start to just slide up and grind up just in a normal way, delta for the dealers is even though it's going towards zero, they're getting shorter in their book and they're going to have to buy. And that's what we saw on Friday. I posit to everyone listening, that grind up at the end of the day that we saw into the close was because of dealer buying. When we see just bar over bar over bar over bar of a 4-digit $6 trillion industry, this to me is dealer signature, right? So if this is dealer signature on the SPX and not a monthly, right? So the monthly, the 18th was a week ago. This is a weekly. So basically what we're seeing here is we're seeing trimming into the weekend. We're seeing this grind upward. That's a collapse of volatility. And I expect to continue. If we continue to see volatility get smaller and smaller and smaller, all the puzzle pieces are in front of us. We're seeing the dealer response. We're seeing Gamma, and Delta basically collapse as we get into 331. We've got these huge pinnings that are going on. And we've got stocks, as I showed, we've got stocks like Apple that even though they had a huge amount of calls come off on Friday with the expiry, we had no downside protection being added relative to the prior days. It didn't change. And with that, but downside protection not changing, but the calls still, jumping hugely over the several days, I think stocks are a go. I think, pick your good stocks. And I think, Bart, to your point, I think it's going to be, calmer, because volatility is going to get damped as things move up. We'll see what happens here. We'll see where it goes.
All right.
People buy calls. We get longer. The dealer gets shorter. They have to buy. If people are not buying calls and we just get a normal grind upward, their deltas, any long positions they have in their portfolios are getting longer. They have to sell. That's a counter effect that they have if they have long inventory. So depending on what their hedging levels are, you will see some dampening of volatility, and I think that's what we're starting to see here, is that longer trade coming, or that longer positioning coming into play here. So, for instance, if we take a look at, let me go over here into the SPX. I mean, what is the SPX for tomorrow, right? So if we take a look, last night's update, net positive gamma. That's what it's telling us right now, right? So we're in a net positive gamma environment on the SPX. So we're starting Monday, net positive gamma, even without all the final updates with the OCC in the morning. In general, we have more calls that are out there than we have puts. And this is, if you look back in time, this is, changed, in recent history, right? So let's see, let's look here. Index condition, you can see even as much as, so this was Wednesday. Let me go ahead and see if I can make this a little larger for you. So in the morning call, right? So you can see the morning call as of 324, 323 close. This was the morning of 324. You can see that we had more puts, but then for the for the run, the 3 a.m. run that we do, you can see now we get parity. And by the way, Panther, this probably would have met, the SPX probably would have met the criteria that we were talking about earlier about that GEX ratio, about 1 to 1.1. And you can see why we want to catch it just as it's starting to transition from this negative environment to this positive environment. And that's what that 1 to 1.1 does on that change up screen. All right. Have I beat a dead horse?
No, I think you beat it enough.
All right. The horse will never get up again. All right. Well, thank you. And you're missing the Oscars.
Yeah, I know. And in fact, wouldn't mind missing it anyway. So
Totally agree. All right. Well. All right. Well. Good.
Hey, Paul, what's the JP Morgan hedge?
I don't know, JB. Why don't you tell us?
Why don't we
don't know.
start doing our own hedge?
It's an EFT.
Yeah, the GammaEdge hedge that even
It's an
Ron
ETF.
Hey, we could be the somebody
No, it's an
copycat.
EFT, JB.
We should institute our own hedge.
We could. I mean, somebody did copycat them with about a third of the size. If you go look at the chains right now, go just look at the SPX for 331, SPXW for 331, and go look at the 4520 strike. and you'll see. And if you go down to the 3810, go down in that area. I think they were at 3800. They're roughly the same magnitudes, but they're about a third to a half. So somebody did copy them.
What amazes me is that people pay them a fee to actually do these hedges. I mean, buy your own SPX and do your own hedges, and they'll pay them a fee. It's beyond ridiculous. Pick your upside and your downside that you'll be happy with, and do it yourself. It's like
and
blows my
remember,
mind.
you can do this. You can actually do this yourself. On 331, and you don't have to do it with the SPX, right? The only challenge that people may have is that naked call up there, you can't do it in an IRA. You can't do a naked call generally. So you're going to have to pick a call way, way up out of there that you're going to have to
Right.
buy, which will offset that credit you get from that naked call to offset the collar. But other than that, I mean, it's effectively the same thing. It'll meet the condition, but you don't have to worry about it because we're not going to race up to 5,000 or 5,500 or wherever you can get liquidity on that high long call. So, but yeah, I mean, you could do this, and the question is can you do it for a credit, right? So or for a net zero, and the chances are with that, if you have to put four legs on, you probably
Probably
are.
not. Probably
Yeah.
not. But why be so hedged? You got to live life a little wild. Being over hedged is sort of, it doesn't show any character.
Or something like
It's nothing my brother would ever do. That's for sure. Anyway,
I sell the hedges. I don't buy them.
right.
there you
All
go.
right. Well, thank you, and we'll catch you guys tomorrow.
All right. Thanks a lot,
How
Barbara.
the
Good night, all.
swim meet turn out okay?
Yeah, Greg ended up seventh. So seventh out of all the colleges in the country.
All right.
Pretty good. Top 10.
That's great. All
Yep.
right. Now stay well.
Yep, you
Take
too.
care, everybody.
Bye. Bye.
Anything else that folks want to cover in the remaining time here?
Oh, we could take it if need be to tomorrow or some other time. But I was kind of wondering what the group's thoughts were playing around with the new Tradytics and the options fan bot. I started kind of just piling through the commands last night, and two of them really kind of stuck out to me, and that was the flow sum and then the one where it shows basically the above ask, at the ask, below bid, at the bid, for the puts and the call side for a.
Right.
And I thought that those two really stuck out as, hey, I might actually use these in a trading flow one day here pretty soon.
Oh, yeah. I mean, we're kind of in that same boat. So here, let me turn off my video, share this. So what you're talking about is this, right? And so what we're playing with is working through the different commands. So we just added this for the gold memberships here. What's key, I think, here is it gives us a very interesting view of flow, and there's a couple different ways to slice and dice flow, right? So what I think is important for the folks who are looking in here is we're now looking at the ability to run on various symbols and look at the distribution of how they're being classified. So this isn't a flow bot in the sense of like black box stocks or cheddar or that other folks. This is giving us summary information, but I think really this is really all we need in order to make things actionable. And so when what our goal is here is to be able to provide an idea throughout the day, to get an idea of what symbols are being hit on both the bullish side, the bearish side. And so a lot of the information that you see here, we've actually combined now, as you indicated, Panther, we've combined both the option FAM bot with the Tradytics information, and trying to make it in such a way that you can run charts. I turned on yesterday the ability to run charts in here too. So now you can run our gamma charts and take a look at overall price action. Take a look at what they call they have different ways of, for instance, of they've got some AI bots, some artificial intelligence bots. I actually think our gamma stuff is better, just on the few that I've looked at here, and I put some rationale in here for you guys to go back and look. The other, I think, key things to understand is that there's a lot of automation that is now web hooked into the site here. And the one that's really catching my attention, so first of all, the dark pool stuff is catching my attention. And there's a dark pool command, by the way, that you have access to, where you can now run the dark pool levels and then compare that by running our $S. You can get a side by side of this. And I think this is one of the things, Panther, that you'll probably want to take a look at and see how do these dark pool levels actually correspond to where we are and where some of the gamma levels are, right? So this would be one structure, or one way to incorporate this into your flow and be able to take a pretty good view. The other thing too that I think is important, that I just want, for the folks who are interested in looking out here, is to take a look at this channel that's called the Bullseye. Now, again, these are auto posting in. You don't issue these commands, and it's going to ignore you if you try to issue any commands in any of these things. But what these Bullseye trades, they take some time to pan out, and they've got about a 73% hit rate. You can hit on the link here, for instance, and it'll take you to a site that will allow you to see, some details of what they're actually recommending, what the price action is, and things like that. So you can actually see how things start turning and what's happening, in general for the given stock. So I think there's a pony in here also, and then if we can overlay these with the gamma, I think you can have some confidence. Now the AI confidence, I've been just testing this, and I'm not, I think this is marketing crap myself, but not overly impressed with what they've got here. But I do like, if you click back, you can go back in history for those of you who want to kick the tires here. You can go back in history and look at some of these, and that triggered, several days ago, for instance. And I don't know why it's not updating. It should be updating. But normally what it does is it tells you what the overall price change is. Again, this is the Tradytics thing. This isn't anything that we control. So I don't know why it's not necessarily populating here right now. Let's just see if we can. So that's a week, but yeah, I don't know when the signal came in, so it doesn't help us. Anyways, the idea behind this is just to give you guys some view of not only the flow information that's available, dark pool information that's available, and being able to look at total premiums, but also be able to see where is it actually happening. So for instance, on the 25th, whenever I ran this, I ran this yesterday. Remember, calls at the ask, anything at the ask is being bought. So puts at the ask, or lean ask.
Would you know what the difference is? Ask and lean ask?
We do, yeah. And I actually had to ask that question too. And a bunch of people here hit me up on the head. I actually went and asked Andrew, the proprietor of Option Fan Bot, also, and he confirmed. So basically, it's the lean ask is not the full ask price, but it's above the midpoint towards the ask. So it's basically, this is the geometric, or the algebraic midpoint in between the bid and the ask. And so if it's given that exact midpoint, it's assigned here. But if it's biased towards the ask, then it's assigned here. And that's what
So
I'm saying.
it's in between the mid and the ask, I guess.
That is correct. That is
That's
correct.
why it's somewhere. That's why it's in between. I
That's
guess.
right. It's leaning towards the ask, and leaning towards the bid is that. So it's
Okay.
so that he confirmed that. So when we see these puts, for the SPY on 325, we actually are seeing puts being bought. So this is effectively telling us that we're seeing more and more puts being bought. We don't know what OE. We don't have visibility into the OE, so it's incomplete. I've asked Andrew, is there a way to start visualizing this by OE, and he hasn't gotten back to me yet.
This chart, this specific bot here, is this something you can pull on request, like we do with the $E, like we do in this charts, or is it something that we cannot pull? It's given to us whenever, I don't know, every hour, every half an hour, or
No, you can pull it, but you've got to have a gold membership right now to get up. I mean
yes, yes, I understand that.
Yeah, so it's up here in the AI channel, and you can run on any symbol that they track here, right? So
do they track the SPX?
it does no index. He does not bring the SPX in. He only is bringing the index ETFs and stocks.
So SPY, triple Q, IWM.
That is correct. Yeah. So I mean, for instance, we can run it like right now.
Yeah.
And there
Because
it is.
the OI only comes out by the OCC in the wee hours of the morning. So this is should we take the word premiums literally as the premium on the like the option, or
This is the daily yeah, no, this is not notional. So these are the dollar amounts spent on the options. I was very clear when I asked him that. So this is not notional. This is literally, you're
that's
looking
delta.
at $116 million spent on the lean ask, for which effectively is buying, the SPY at whatever volume that would be associated with that. We don't have the volume or the OI here, but this is just showing us the distribution for pricing. And for me, so the takeaway here is this, right? So this is telling me, when we take a look here on the call side, we're actually seeing calls being bought, right? No question. We're also seeing calls being sold, right? And at the ask, and you can see that, all right, sentiment Friday, just with what we saw, we're potentially seeing a little bit of a topping. That's how people were positioned. Now we don't know if these were zero DTEs. We don't know what was happening.
That was my next question was, and I'm sorry to interject, but
No,
that was my next question is what's the DTE on this? Like the wing charts, we can pull up the DTE.
that's right.
And now it's leaning towards the left. These are put bought, put sold? Is this a net? In other words, does the red bars often go towards the right hand side?
No. So basically, I mean, these are the limitations of flow, right? You don't necessarily know. So puts at the bid are being sold. You don't know if they're being closed, but they're being sold, right? They're either being sold short or they're being closed. So you had a long position that's being closed, or you had no position and you're selling it short. It's a completely bullish, bearish. It's a completely different position, right? And we have no visibility with this. So you have to understand the limitation of what you're looking at here. So Albie, to your point, you're spot on, right? We don't know, and no, it doesn't go to the right. It's just basically saying, again, this is why I bitch all the time, excuse my language, about everyone who puts all their money on flow. Flow is important. I'm not discounting flow, but flow has errors, right? There's just so much you can tell with flow or not. Now, of course, there's the whole discussion about deltas and all of that. I get it. But here's the key takeaway. This gives us a visibility, right? Is it actionable? I think it's actionable. I think it's actionable, especially as you look through the other symbols, right? You can start getting a sentiment about what's going on with different symbols. And you can see that Panther ran some of the other symbols here. And I think it's actually useful to get an idea that we see Tesla. I mean, this confirms what we see in Gamma. This confirms what we see in other venues, that we're seeing a lot of flow into Tesla, right? And we're seeing a lot of call flow. We see the calls building in Tesla day over day over day. And this tells us, yeah, that's probably true, right? So it's just another confirmational data point for us. And I think it's worth our while. The presentation that I showed today with that Michael and I did, shows a really strong Apple, position continuance. So we'll just have to take a look here and see, what's happening. We saw some monetization come down in short-term Gamma in Apple, but in general, you can see there's still a lot of calls going in that perhaps have nothing to do with Gamma because they're so far away. They're way out of the money, and their Gamma signature relative to today or to Friday is minimal. So I do think this can be another data point for us, another piece of the puzzle.
Yeah. Hmm, Interesting.
Yeah, no, I want you guys to look at this stuff. If this stuff's not useful, here's my worry, right? You guys know how I am about what we do here on the site. I'm concerned this will be the bright shiny object and it will diffuse your success. It will confuse or confound or perhaps lead you into either not making the correct decision points or being analysis paralysis, where you've got too many indicators to look at and things like that. The flip side of this, it's not my role, it's not Taylor's role, it's not Ryan's role or John's role to tell you pick this stock or don't pick this stock per se. What we want to do though is we want to put a process together, and I think this is what Michael's been working on with each of you who are working with him. How do we go from the market model down to, either through the scans or through, how do we interpret our stocks? This is another way to interpret the stocks, and I think there's some power here. And so to what Panther was saying, I do think there's a pony here, right? I do think you can look at this in context of flow, and like I was saying earlier, I think there's actually you can look at the overall premium that's coming in. You can see what it looks like. You can see what it looks like. You can take a look at some of the what they call algo flow. You can look at our history charts and get a confirmation. And if you feel comfortable with what you're seeing here, the data stands by itself, right? Copy it, put it in your trading journal and your trading log, and say, "This is why I pulled the trigger on Tesla."
I guess it depends to a certain extent your trading style and time frame. Different
Absolutely.
tools could be useful for a short-term intraday index trader, while other tools may be applicable to a weekly Friday expiration trader and so forth and so forth. So I think it.
No question, and I think the wing charts actually help us with a lot of that shorter term stuff. I think.
Yeah, that's what I use. That and the
Yeah.
tick are my golden nuggets, so to speak.
Yeah.
My
Really
compass.
meta.
Yeah, exactly. Like um,
Yeah. No, I agree with you. I think and by the way, just running tr-help will give you all the commands that are available to you. And there's a lot here, right? I mean, it's literally, again, if Gamma doesn't give you enough to drink from the fire hose, this is like, we're the garden hose. Gamma's the garden hose, and these guys have got, obviously, they got a lot here. We're not making representations on the accuracy of this, but it looks good. I mean, it looks. We would not have exposed it to you had we not thought there was something here to look at. And we want your feedback, right? If it's not worth the while, we won't continue it. But I think there's enough here that we can corroborate what we're seeing and go from there.
It's like a restaurant's menu, no? You got a bit for everybody, and depending on your mood and your tastes, you'll pick maybe no, an all-dressed pizza versus a smoked meat sandwich, no?
Yeah, exactly.
Or pastrami, yeah,
Right.
or corned beef. Okay. Actually, I don't know if Taylor is on board right now, but we had a brief conversation, I think Wednesday's open mic, and we talked about briefly, and I shared a bit having to do with DDOI data, directional dealer directional open interest data,
Yeah.
which is mentioned a bit in the squeeze metric. Squeeze metrics document, and he was going to look a bit into it. I looked a bit into it, but there's not a lot of information out there. And I think you and I mentioned it a bit briefly that
Yeah.
it would be a bit of a holy grail, because according to what the lemon says, I don't know who runs it, but let's call him the lemon. We already got a croissant, so might as well add another. the lemon. He talks about the DDOI being there's a trace. It's traced from open to close, and this tells us what dealers hedge, because sometimes there's non-dealer hedging made from retailer to retailer. And
No. Not through options.
yeah,
No. It's an obligation. Now the dealer may have two parties, may have a counterparty with two parties sitting at the table, but everything clears through a dealer. It's law. Everything. You can't have. You can have off book stuff, which has nothing to do with the OCC, but that's off book, right? So let's be very exact in our language here. The DDoI doesn't allow you to bypass the dealer or the broker. There's always going to be because they're obligated, and that's their contract. So you and I can't transact direct to direct.
just I don't want to misspeak, so let me just I think it was where is it? It's garbage disposal. I think it was in the questions. Let me just bring it up here. I'm in the channel. Yes, it was a gentleman by David Dolson. David Dolson. He posted it up in the garbage disposal. I can paste it again. I guess there's no problem here. There's a paragraph according to what, because it has to do with the VGR, the Vanna gamma ratio, and he talks about it. It's a little short paragraph. I can
Dropped it in the voice chat for you.
Oh, you just dropped it?
Yeah.
Oh, okay. Thanks.
Yeah, no problem.
Discord. Yeah, there it is. No, it says the reach. Blah, 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 blah. Yeah. I don't think I need to read it, right? You're reading it.
Yeah. Yeah.
It was, for example, for every dealer position, every contract in DDY, there is one customer exposure, and for every other position held between two customers, every contract in OI that is not in DDOI, there are two customer exposures.
Right. That's what I was saying. Two people are sitting at a table. Yeah. I mean, there has to be a dealer. I can go find the language. I found it in the past.
I'm not arguing
No,
you, but I just
no.
want to. That's why we're talking about it. I just want to make sure that I thought two customers. This meant like two traders, like two participants without a dealer. They swap hedges.
It's not allowed. Now,
Okay.
there again, there are off book, and when I say off book, right, it's not through the OCC. It has nothing to do. It's not registered with the OCC. It has all. It's still regulated, but it's not part of that structure. The dealers would be cut out in that particular case, right? And so think of dark pool, right? Dark pool is kind of that's the way I think about it. Dark pool is one way that they're still actors, but they're not the market transactions, right? It's a whole different type of exchange structure. And so I could imagine, and I don't know about the DDoI, I have to go dig into that. But I do know option transactions are obligated under law, under regulatory law, to go through a dealer. Now, a dealer can have, you can do box trades, you can have double customers sitting at the side, but the customers don't transact directly. They go through the dealer instantaneously, but and the dealer can elect not to take a spread on any of that, right? And not do anything. Why would they though? Because that's how they get paid. And the partial answer, why would they, is because they get the credit. And if they make volume of a certain amount, they hit their targets, and then they get paid for providing the liquidity that they were doing. So I could see in my poo brain knowledge of this stuff, I could actually see where that two customers are sitting on one side of the table, they want to transact, and they get into some sort of transaction with the dealer where the dealer's not charging them anything, but the dealer gets the credit and it goes towards their overall contract to provide liquidity. Something like that, right? I could see it. But in general, I can't, this would be such a, this would turn the industry upside down because the dealers make the money on the spreads. And to Panther's questions, earlier or later in the week, although I'm sure there are a whole bunch of dealer actors who, take directional stuff intraday and do whatever they can do to maximize, but they're not paid to do that, right? They're paid not to take risks against their company. And all you got to do is just go look at all the traders who went off the ranch and screwed up and literally ended up in jail or got fired or ran away and ran to a different country because they were going to get prosecuted and thrown in jail. You don't expose your company to risk, right? So I think the model, I haven't looked into the DDoI in detail.
I just posted another little paragraph which I found in the famous implied order book PDF by Squeeze Metrics, where he talks about DDoI. He goes, it's a measurement of whether option dealers are short or long any particular option expiration strike, blah blah. Because publicly reported open interest only tells us the number of contracts in existence on any given day. We have to delve into transaction level data to access the direction buy sell for every SPX option trade, and that's the holy grail. That's what we want. On which side are they? How?
And I looked at, I talked to a couple different folks who provide big data pipes, and it's a big data pipe, right?
Is that even like purchasable, or is it available to anybody, or is it just institutional, or is it actually available for anyone? Because I went to the CBOE website data, and they don't offer that service. They don't offer that data.
Yeah, you don't offer it. Yeah, I don't think it's I don't think it's available to us. I think it would only be institutional.
Yeah, because I think we both agree, and all of us would agree. Well, isn't that's the holy grail of what we're looking? We want to know on which side the dealers are. We always have to assume or make certain assumptions. That for single stocks, customers are long puts, long calls on the indices. Customers are long put, short calls. They have callers,
right? Well,
and therefore there's some predictability there, but it's an assumption.
So let me just put this final thought. It's almost 10 o'clock here, so I'm gonna get off here now. But let me put this final thought in everybody's mind who's still listening. So Jim Carson went on, and, he calls what we're doing with OI a toy model. Okay.
Yeah.
He also says in the same interview, if it gets you 60, 70% where you want to go, it's good enough.
That's a hell of an edge.
Now, Jim Carson also has said in other interviews, they build each of the dealers' books, right? They're watching the transactional value. So I have no doubt it's available, and especially with his background and his connections in the industry, I have no doubt he has the ability to go get and have certain data feeds. But he's complained many times that the data pipe is extremely large, right? In order for him to get,
I could imagine. No, obviously you're right. He's got the plugs, the connections, the inside scoop,
yeah,
and remember this tracks like it's like every step of the way from open interest to close, from
correct.
BTO or STO to BTC or STC, sell to.
Well, and you know, there is an ability, obviously, to know who's doing what trades. You know, you probably have seen Twitter feeds from folks where they actually say the same trader did this. You know, Tim the market maker, for instance, often says, you know, the same trader, you know, came back and did XYZ. Well, how would you know something like that? Well, you would know lot size would be correlational, right? That's the first thing. The instrument would be correlational. Most likely it's labeled against an exchange with whoever the, you know, the prime dealer or prime broker is. And so that's labeled there, and all of a sudden you can start saying, okay, well, Citadel's doing this, or Goldman's doing this, or Bank of America's doing this, right? And now you can start getting down and saying, okay, it's a customer, it's one of their customers, it's a big wheeler, it's somebody that's, you know, serious, and they're doing this over and over and over. So I think you can start isolating it down like that. Now, is that our role? Is that our role? And although some of that information might be useful, I'm not sure if it gets us, if the other additional 30% is worth the cost of getting there or the effort to undertake. And I wouldn't even know right now, you know.
Yeah, and I'm just throwing the question out there because it's I don't know, it's like in the movie Inception. No, he goes like once you have an idea.
One of my favorite movies, by the way.
I had to see it like 4 times before. No, every time you watch it, you see a new layer. You understand something new. But that's once you get an idea put in your head, it's hard to take out. No, so I just had this question about, and I just wanted to pursue the question to satisfy it, satisfy my curiosity. If there's nothing to be done, but I do agree with you that sometimes the law of diminishing returns. No, you get if you get enough of an edge to make a good living, no, or make enough profits with that 70% that we have now, it's excellent. No, is getting that extra 30%, worth the time and effort and everything. We
Well,
don't know.
I think so. So here's the deal, right? I think if we, and this is my final thought. I'm going to go to bed here.
Yeah. No, it's late. It's late.
So if we can master what we have in front of us and identify the errors in what we do, I'm always willing. I mean, I'm an engineer. I'm always willing to, you know, push on the next thing, right? But I think there's enough here and enough styles at the table and enough knowledge at the table. Let's make this the best we can, right? And be very clear and transparent to everyone. It's got limitations. The OI chains, the open interest chains, are only positive numbers. That should right there tell you there's a limitation, right? We don't know who's negative what and who's positive what. It's all open interest. It's all positive numbers. So okay, the toy model has got limitations. But I think the folks who have been here for a while realize, you know, this stuff's actionable, right? I mean,
No, it's definitely actionable for sure. And besides success, as you'll see in a couple of weeks when I get my thing done, presentation done. At the end of the day, it depends on simple math. No, it's simple math, cutting those losses that will give you that biggest edge.
Yeah, and so I again, just kind of tying this all together. I know the DDOI thing. You and I talked about it several months ago when you first joined, and I think it's something to definitely. I mean, it was enough for me to call Rhythmic and DX Feed and talk to them and see what was possible. I didn't call CME or CBOE, but you know, talk to the big data pipes, right? And the big data pipes basically, our big data pipes. We're looking at tens of thousands of dollars a month, right? So that's just not feasible.
Yeah, I understand.
So then the question becomes,
We need to
what
get
can
a
you-
couple hundred more subscriptions. Like I think Taylor said that to me. Oh, we need a couple hundred more subscriptions.
Well, I mean, we're just so everyone who's listening, no, we're not taking any money out of this, right? So all the money you guys pay stays in the company right now. I mean, we're investing in the company, but it's going to take a lot of investment in the company to.
Yeah, this is not cheap. Well, maybe that's why it's so exclusive, and they purposely do it as exclusive. But anyways, that's okay.
But,
My curiosity has been satisfied. I won't bring it up again. I promise.
bring it up.
No, it's just
Albert, bring it up. I mean, seriously. I mean,
Bring it up. Bring
bring.
it up.
someone's trying to. Anyways, like he's. I think it was Panther, the kid in the schoolyard who's saying, "Fight, fight, fight, fight."
It's all good,
All right. Well, thanks for the explanations. It's no, you're the expert. You know you've dug this stuff, researched this stuff, so you know what's out there, what's not out there, what's possible, what's not possible, and
Well, you started it. You asked the question several months ago, and I wanted to see, right? And at the end of the day, it's all about if there's something that takes us to the next level, and we can do it. Like, so for
Yeah.
instance, adding this, Tradytics and the option fan bot, if that gives us, because many of you have asked for flow, right? And I'm not on board with like cheddar flow and the stuff that comes in line for line, and you got to parse it and all that stuff. And we've done that with TOS, with TDA, and it's a pain in the ass, first of all, and two, it's got errors. It just has errors, and so
garbage in, garbage out.
but here's the problem. If you take on that data feed, you now have to service it, right? So I'd rather just pay somebody's to bring it in here, and that's what this stuff is. So if we can advance our goals of making money, which is absolutely why we're doing this, right? We our individual accounts, we want to get into a process, market model. What's the tick telling us? What are the optional or actionable things, and what's the confidence level to make us put money on the table? And that's what you're doing, is talking about risk management and how you do the numbers here for sizing and all that stuff. If we can put all those pieces together here, there's going to be plenty at the table to keep building on those things. So I'm
No, your wing charts and your tick indicators. That's what I use. That's I'm a bit of a minimalist, but that's
Yep.
just my style. My my brain can only absorb so much, so
Yep.
I need to keep it simple.
Yeah, we're on the same page. I too. As many of you know, the only other thing I have on my charts, aside from the stuff that we play with, when you see my TradeStation thing, you see my John Carter tools. I just feel obligated to use them because I took his class.
Maybe just I'm here for the rockets.
There we go. There we go. All right, guys. 10:04. You've wasted another 2 hours with me and Taylor and everybody else, but I hope this was useful for everyone.
Yeah. Yes, it was. Yes, it was. Yeah.
We enjoy it, and just so everyone knows, we enjoy this. So, Taylor, any final thoughts, comments?
No, I'm good here, Paul.
All right. Well, we want to thank everyone for making the time. We know it's Sunday night and it's hard, so depending on where you are in the world. So, thanks a lot, everyone, and we'll see you bright and early tomorrow.
Thank you guys for the time. Really appreciate the time you guys are putting into this. Help us out.
Absolutely. No, it's a lot of fun. We enjoy everyone. So take care.
Take care. Thanks.
Yeah.
Bye.
See you guys.
Ciao. Thanks.